Today has been a brutal session across the critical mineral sector, with several high-profile names getting hammered during Thursday's trade. Lithium Americas, ticker symbol LAC, is down roughly 22%, trading around $7.37. Energy Fuels, ticker symbol UUUU, and American Battery Technology, ticker symbol ABAT, are also sharply lower, following a wave of selling that has swept through lithium, rare earth, and uranium-related stocks. The question is, what's really going on here? Is this a collapse, or a hard reset in a sector that's been running hot? Let's start by setting the stage. This isn't just a bad day for one company, it's a widespread risk-off move hitting critical minerals names across the board. Over the past month, these stocks rallied hard on optimism around domestic resource development, the US government's increasing involvement in strategic materials, and the belief that policy tailwinds would underpin valuations. But today, we're seeing that optimism unwind quickly, and not without reason. The biggest headline driving the sell-off is the confirmation that the U.S. Department of Energy has terminated a $57.7 million grant for American Battery Technology's lithium hydroxide project. That's a major blow for ABAT, which had been positioning itself as a domestic processing and refining play within the lithium battery supply chain. The DOE's decision signals growing scrutiny around how funding is allocated, how companies execute on their commitments, and whether projects are meeting key milestones. For investors, it's a chilling reminder that government support, while powerful, is not unconditional. This move has rattled confidence across the entire sector. When a flagship player like ABAT loses its DOE backing, investors immediately start wondering, could others be next? Could projects that rely heavily on federal loans, grants, or partnerships also face review or revision? That's where Lithium Americas comes in. LAC stock has been highly sensitive to any hint of changing sentiment around U.S. government involvement. Just weeks ago, the DOE confirmed its $2.26 billion loan to fund construction at Thacker Pass and even took a 5% equity stake in the company, a move widely seen as validation of LAC's strategic importance. But when something like ABAT's grant termination happens, that narrative is suddenly tested. Investors start asking whether similar oversight or accountability pressures could appear elsewhere. Even though there's no indication that LAC's funding is at risk, the market often reacts first and checks facts later. So part of today's sell-off is purely fear-driven, the assumption that if the DOE can reverse course on one project, it might eventually adjust or tighten conditions for others. Now, let's talk about Energy Fuels, ticker UUUU. While not a lithium company per se, UUUU operates in the critical mineral space with exposure to uranium and rare earth processing. Those markets are heavily influenced by global trade policy and geopolitical developments. This week saw renewed trade war rhetoric between the United States and China, including new speculation about China tightening its export controls on rare earth materials. That sent shockwaves across the commodity spectrum. At first, some rare earth names rallied, but by Thursday, the move had reversed violently. Investors realized that export restrictions cut both ways. They can drive prices up, but they also choke downstream production and create short-term uncertainty. So UUUU finds itself in the middle of a narrative whiplash. On one hand, it benefits from efforts to diversify supply chains away from China. On the other, any escalation in the trade war brings volatility and risk aversion. When the market senses rising tension, it tends to dump high beta names first, and that's exactly what's happening now. All three of these stocks, LAC, UUUU, and ABAT, have been part of a larger critical minerals trade that's captured retail and institutional interest alike. These companies symbolize America's push for self-sufficiency in resources needed for electric vehicles, batteries, and advanced technologies. But that same positioning makes them vulnerable when sentiment shifts. If investors lose faith in the stability of government support, or in the broader policy momentum behind the energy transition, these stocks take the hit first. Let's look at the mechanics of the move. In the case of Lithium Americas, we've seen a cascade of technical selling. After breaking above $10 earlier this week, the stock failed to hold that psychological level, which triggered stop-loss orders and algorithmic selling. Once the price slipped below $9, momentum traders began to exit positions en masse. The result is what we're seeing now, a sharp downward acceleration, amplified by fear rather than new information. For ABAT, the situation is more fundamental. The DOE's withdrawal of grant support undermines the company's immediate funding outlook and raises questions about its long-term viability without government assistance. For Energy Fuels, it's more of a sentiment bleed, a broad sell-off of everything related to rare earths and uranium in response to macro fear. Put all of these together, and you have a perfect storm: negative policy news, technical breakdowns, and panic-driven de-risking. But it's important to distinguish between short-term turbulence and long-term narrative shifts. While the sector is clearly under pressure, the strategic importance of domestic lithium and rare earth production hasn't disappeared. In fact, it's arguably stronger than ever. The very reason the government is so involved, and so cautious, is because these resources are vital for national security and industrial competitiveness. Pullbacks like this one often separate hype from genuine execution. So let's take a step back and assess where things stand for each company. For Lithium Americas, the underlying fundamentals are intact. The DOE loan and equity stake remain in place. Construction plans for Thacker Pass are moving forward, and General Motors' partnership provides a deep-pocketed commercial ally. The main overhang now is perception, how investors interpret the ABAT grant cancellation and whether they start extrapolating that risk to LAC. If management can provide reassurance, either through an update or a reaffirmation of government collaboration, confidence could return quickly. For energy fuels, the outlook depends largely on policy stability and commodity prices. UUUU operates in markets that move with global geopolitics. If tensions between the US and China continue to escalate, the volatility could persist. However, if Washington signals stronger domestic production incentives or strategic reserve initiatives, companies like Energy Fuels could bounce back sharply. For American battery technology, the challenge is more immediate. Losing a $57 million DOE grant is a material setback. The company will need to explain how it plans to fill that funding gap, maintain its project timelines, and reassure investors that its business model remains viable. There's still a chance that ABAT could pursue alternative financing or private sector partnerships, but until that clarity emerges, the market will likely treat it as a high-risk name. It's also worth mentioning that today's sell-off may be exacerbated by algorithmic linkages. Many ETFs and thematic funds bundle lithium, uranium, and battery tech stocks together. When one component experiences a sharp drawdown, especially if it's news-driven, automated systems often rebalance across the whole basket. That means selling pressure in ABAT and UUUU can indirectly drag down LAC and vice versa, even when there's no direct connection between their fundamentals. So where do we go from here? There are a few possible scenarios. In the first scenario, this proves to be a short-term flush. The market overreacts to the ABAT news and to generalized trade war fears, but fundamentals reassert themselves once the dust settles. Under that view, LAC stabilizes above the $7 level, the DOE or company issue statements confirming business as usual, and buyers gradually return. In the second scenario, the weakness extends. If more headlines surface about government funding reviews, or if China's export restrictions escalate, risk appetite could remain muted. That might push valuations lower across the sector until new catalysts emerge. In the third and most constructive scenario, we see divergence. Stronger, better capitalized players like LAC and UUUU stabilize sooner, while smaller, riskier names like ABAT continue to struggle. The market begins differentiating between companies that can self-fund and those that can't. This kind of shakeout often marks the transition from speculative hype to genuine investment opportunities. For investors and traders, the key now is to focus on execution and communication. Watch for official DOE statements, company updates, and SEC filings. If LAC reaffirms its funding structure or reports new construction milestones, that will be a powerful stabilizer. Likewise, if ABAT can replace its lost grant with private financing, it might surprise the market with resilience. And if Energy Fuels can capitalize on any new government incentives for uranium or rare earth production, it could rebound faster than expected. For now, though, volatility rules the day. The sector that was a safe haven for critical minerals bulls has suddenly become a proving ground for patience. These stocks are not collapsing because their stories have failed, but because confidence is being tested. In summary, Lithium Americas, Energy Fuels, and American battery technology are all facing heavy selling pressure amid a mix of macro fear, policy surprises, and technical breakdowns. The termination of ABAT's $57 million DOE grant triggered a wave of uncertainty that rippled through the entire sector. Combined with ongoing trade tensions and investor profit-taking, that uncertainty has translated into a steep correction. But while sentiment is bruised, the long-term drivers behind these companies, domestic supply, government backing, and strategic importance remain intact. These kinds of sessions remind investors that in emerging industries, volatility is not a bug, it's a feature. Every new policy, every funding change, and every geopolitical headline can swing these stocks dramatically. But beneath that noise lies the same structural shift that made them attractive in the first place: the race to secure North America's future in energy and technology materials. Whether this is a panic or a reset will depend on how management teams, policymakers, and investors respond in the days ahead. But one thing is certain: the critical minerals story is far from over. It's just being rewritten under pressure.